Welcome back to the second segment of the Tax Time Season 2 episode right here on TV Asia with Mr. AJ Kumar, CPA, MBA of Science CPA Services. In this episode, we're talking about F-bar or foreign income, and there are a lot more to know in in this topic. And in this episode, we're going to try to give you as much information possible. Would you like to give an overview
Sure,
of
absolutely.
this foreign income to our viewers?
Absolutely. There are two different requirements. दो अलग-अलग बातें हैं.
जी.
Foreign income and foreign
the
reporting.
Okay.
दो अलग-अलग बातें हैं. So there are rules around it. Foreign income, if you had any income, even if you have $100 of income, you must report it. You must pay taxes. Income, tax. If you have income, you pay tax. The reporting requirement is different. It has nothing to do with income. Reporting is for the assets. The assets can be of two types. Liquid asset, cash है, FD है, bank deposits हैं, that's liquid asset. Non-liquid asset, घर है, दुकान है, shop है, all those that you cannot convert into cash overnight. Non-liquid. If you have liquid asset, and the rules are if you had more than $10,000
जी.
at any point of time during the year,
Cash, liquid asset.
liquid asset,
Okay.
in all accounts combined together,
Yeah, it must be reported.
then you have to report it. No tax liability. दो अलग-अलग बातें. Foreign income, you have to pay tax. Income में there is no threshold. $100 की income है तो tax देना है. $50 की income है तो tax देना है. Reporting is the $10,000. For liquid asset, if you have less than $10,000 in all the accounts combined together, you don't have to report it. And it's an individual. So if your husband has 5,000 and wife has separate account with 5,000, no reporting requirement. And this is for the liquid asset. For the non-liquid asset, the limits are higher. भाई घर की वैल्यू तो 10,000 नहीं होगी, घर की वैल्यू तो बहुत ज़्यादा होगी.
जी, बिल्कुल.
So for non-liquid asset, the limits are $100,000 at the end of the year, or $150,000 at any point of time during the year.
Okay.
अगर आपके घर की वैल्यू 100,000 at the end of the year है,
जी.
या $150,000 at any point of time during the year थी, then you have a reporting obligation. If you are a US resident
जी.
living in US,
Okay.
but if you are a US resident or considered to be a US resident living outside the US, say expat, I go back to India, I buy a home over there to live over there, then the reporting requirements are very different. Then the reporting requirements are 4 times higher.
Oh.
So if you have expat,
जी.
meaning a US resident living outside US, they are allowed to have up to $400,000 of non-liquid asset at the end of the year, or up to $600,000 of non-liquid asset at any point of time during the year. So जो 150 था वो 600 हो गया,
600.
जो 100 था at the end of the year,
वो 400
that became 400.
400,000.
That's for non-liquid asset.
जी.
For liquid asset, which we typically get across, because 10,000 is too small. 10,000 is what? 7 lakh रुपए. So 10,000 is a small limit now. Anybody, everybody, a lot of people have it.
बिल्कुल.
The best thing is, it's only a reporting requirement. You have no tax liability for reporting it. And जैसे हमने पहले discuss किया,
जी.
if you are reporting it, then you have the right to bring it back. Now consider a situation. पहले तो आपने report करके you are on the right side of the law. You are doing the right thing. Second, if you ever bring this money back, nobody can question it because you have reported it.
Correct.
Third thing, you did not have to pay any taxes anyway.
Okay. All right. Now that obviously, जैसा आपने कहा था कि break से पहले कि this is quite a complex issue and a lot more information to be given.
Absolutely.
Would you consider this perhaps one of the most talked about or asked about topic during the tax season from your clients?
It is, depending on the community. As a Indian CP, I come across a lot of Indian clients. So
जी.
for people like
जी,
us,
absolutely, yes.
it's a most talked about subject. Foreign income, foreign assets, F-bar, FATCA, FinCEN 114. They're all related to people having foreign assets, liquid, non-liquid, or foreign income. So I, or a lot of people, a lot of CPAs like me, come across this kind of situation.
Interesting. Now, this you keep saying India, India, India. What if someone migrated from any other country than India? For example, UK. I'm just using that example.
Right.
UK or Africa. Same rules apply?
Similar
Acha.
rules apply.
Acha.
US government has a tax treaty with India under section 221.
Correct.
So we have certain rules, certain obligations. So US government does not have a tax treaty with every other country. But in most cases, similar rules will apply.
Correct.
So you have to be careful with which country we are talking about and what kind of tax treaty US government, IRS in US has with that country.
अब मुझे एक बात यहाँ पे समझ में ये नहीं आती, and forgive me if I'm asking you this question, but it just bothers me. US government or Uncle Sam, basically what we say, wants to know कि foreign income क्या है, reporting क्या है.
Right.
But they don't want to know how much money you're sending outside from US. मतलब, you're making money here and you're investing into properties in India or anywhere else in the world. They don't want to know कि भाई आप कितने पैसे वहीं पे भेज रहे हो, क्या भेज रहे हो, किसके लिए भेज रहे हो. Nothing bothers. They're not bothered with that. Why is it that?
Well, we do track it. We do want to know it, especially if you are sending it for business purpose. So if you are sending it for your family maintenance, then there are gift limits. $15,000 per person to per person.
Acha.
And we don't mind it. You earned it, you paid taxes.
Right.
So
And then
aapki
you
marzi.
sending, exactly.
Right? Yeah. But if you are doing it for business purpose,
That would be completely different scenario.
then we are
for
concerned
business
about
purpose,
it.
Yeah.
Because now you want to take the tax advantage. You want to claim the money that you are sending to India or any other country as a tax deduction, as an expense. Then we have to see, then we have to track it.
But if they are investing money from US business into India business,
Right?
is it also considered taxable, or that can be okay?
It depends. So if you are, the term investment means I'm expecting future benefit, then it's not a tax deductible transfer. But if we have a situation that I'm trying to open up another office in India, say if we have an IT company,
Ji.
they have an office in US, they're trying to open an office in India, Chennai. Then they're transferring money to cover the salaries over there. That's all deductible expense.
Barabar.
We have to track it.
Yeah,
though.
absolutely.
I mean, how do we make sure the money that's being sent from here is actually being sent for the business purpose only? That's what we need to track.
All right. And then for this reporting purpose, is there a certain form that you attach with 1040, or how does it work?
Yes. So there are certain filing requirement. If we have the liquid asset, then we do FBAR. It's called FinCEN, FINCEN, FinCEN 114. If you have non-liquid asset, depending on how much assets you have, we have FATCA filing, and the form numbers are 8938. There are other lot of forms involved depending on individual situation. If you have income, foreign income, and you paid certain taxes in India, let's say you have $100,
जी.
आपके पास $100 की आपकी income है, which is not uncommon,
बराबर.
interest income,
बराबर.
and you are paying some taxes over there. Then if we include that income in US taxes and ask you to pay taxes again, then you are sort of paying double taxes. You pay taxes in India,
Which doesn't make sense.
which doesn't make sense. So
Absolutely.
under the tax treaty, the taxes that you paid in India becomes deductible.
Just like we do it here between the states, New Jersey and New York or any other. If
Very,
you live
very
in
similar.
Jersey and then you work in New York, that's how it works. You pay taxes there, but you get deduction here. Something
Very, very
similar.
similar.
to it.
Very, very
Okay.
similar. And then there are
Interesting.
different forms, Form 1116 to get the tax credit. So form depends on your situation. There are several forms around it.
Okay. Well, Ajay, Mr. Ajay Kumar, the way that you are explaining all these things, because obviously you know all these things, and for you it's just like walking in a park. But me or viewers have to get used to with this little by little by little. So let's just take a short break, and when we come back, we're going to have more information for you on this foreign income or FBAR right here in Tax Time Season 2 episode. Please don't go anywhere.